In this video, I'm going to give you everything I learned about buying new commercial truck insurance. So hopefully this can be your guide to making the process easier. Hi everyone, my name is EJ Anderson, the Congressional Auditor turned long haul truck blogger, also known as the happiest, kindest trucker on the road. Welcome to the White Glove Trucking channel, where I help you use trucking as a vehicle to live your best life. Now, in an earlier video, I told you guys about how I got dropped by my insurance company. Well, in this video, I'll take you through the process that I used to get new insurance. Now, I had to do this from the road, which made it a bit of a hassle, but this video should definitely make it easier for you. Should you have to do this, I hope you never have to, but should you have to do it, this video should make it easier for you. Now, insurance is one of the highest costs for a carrier or owner-operator, so I wanted to do my research to make sure I got the best deal. Now, PHMSA requires $750,000 in liability coverage and $100,000 in cargo coverage. But most of the brokers I use actually require $1 million in liability coverage. So I had to get quotes for that amount. Now, the reason, well, at least one of the reasons why my insurance company dropped me in the first place was because of my safety violations. But my insurance agent told me if any of them were wrong, then I could use this system called DataQ. I didn't even know about this system, so I looked it up. DataQ is PHMSA's system that allows you to challenge and correct your safety inspection data. So before seeking new insurance, I decided to try to dispute the violation I got for driving on a suspended CDL. I hoped if I could get that one removed, then maybe my insurance would be cheaper. I submitted my request, and after about a month, I got an email response saying my request had been denied. The email said, Idaho does not remove violations from inspection reports unless the violation was improperly documented or written in error. So after that didn't work, I decided to go ahead and start shopping for new insurance. So I began with this list of Great West competitors that I had grabbed from a screenshot when I was doing one of their surveys. You know, I thought I might need that at some point, but I didn't realize it was going to be this soon. So I checked all of these truck insurance companies, but none of them would quote to an individual trucker. They all wanted me to go through an agent. Next, I checked the big known companies like Allstate and Farmers. Allstate didn't do commercial truck insurance, and Farmers I will actually talk about in a second. So the only two insurance companies I could get a quote through directly were OOIDA and Progressive. So let's take a look at these two. First, OOIDA. The quote was for $17,113 for the annual premium. I actually liked OOIDA, the feel of it. They were like friendly and down-homey feeling. They required a down payment of about 1 month's premium, and they told me that I could not hire drivers until I had been with them for 2 years. All right, let's take a look at Progressive next. Progressive's annual premium was $19,450, which means that OOIDA was $2,337 cheaper per year, and that equaled about $195 a month. I liked Progressive too, but they had an automated system, so it took a little while to get to a real person, so it wasn't as like personable as OOIDA. Their option to get a big discount when you pay in full for the year is a great feature if you can afford it. And then lastly, and with Progressive, when it comes to hiring drivers, you can hire them right from the start. So at this point, at least I had two things to compare, and I was still waiting for two local agents to get back to me, Farmers and a local one near me called Acrisure. Now, when the Farmers quote came in, they used a subsidiary called Craft Lake for their commercial truck insurance. But what they ended up doing was basically quoting through Progressive. Then when I heard back from Acrisure, she said that she had gotten a lot of quotes, but none of them could compete with Progressive's price when you pay in full. So she ended up also quoting me through Progressive. So now I basically had the OOIDA quote and 3 separate Progressive quotes. 1 I got directly and 2 I got through agents. And all the Progressive quotes were around the same price. So now I had another question. If I do decide to go through Progressive, should I just get it through them directly, or should I go through one of these agents? So I ended up asking one of the brokers that I had talked to in this process, so what's the difference between me just getting my insurance straight through Progressive or straight through the insurance company or going through a broker? She had a couple of good reasons why I might want to use a broker. Okay, the first reason she gave was more flexibility with more insurance options. Some agents are dedicated to one insurance company. If that insurance company drops you, then your relationship with that agent ends. That was exactly the case with me and Great West. But if you have a broker, your broker stays with you. And if an insurance company drops you, the broker can help you find a replacement. I admit this would have been handy in my case. The second reason she gave was quicker proof of insurance. Let's say I needed to quickly send over some insurance, proof of insurance, to secure a load. She said a broker can send that over much more quickly than if I had to do it on my own by calling a 1-800 number, waiting on hold at some big insurance company. Now, I really wasn't sure how much this one applied to me because I use all the big digital brokers who manage all their insurance compliance through RMIS. In my experience, I've only had to send my insurance one time to RMIS and not have to worry about it again. So this concern seemed a little bit outdated, at least in my case. But if you use a lot of different brokers and they each require you to send your proof of insurance each time, then I can see this being a really good reason why you would go with the broker. So I was getting there, but I was still undecided. So I confided to one of the Progressive representatives that I was a little bit unsure of whether or not to just book this directly through him or go through an agent. The information he gave me was really helpful. He said that Progressive agents do not get commission and that my premium would not increase if I went through an outside agent. He said that the agents are paid by Progressive receiving less rather than me paying more. He also said just because you go through an agent doesn't mean I can't call Progressive directly if I wanted to or if I needed to. I actually really appreciated this option, and his information was really helpful in me making my decision. All right, I was almost ready to decide, but I needed to figure out one more thing. Did I want to get all the coverage I had before, including the physical damage coverage? Or did I just want to get the minimum that I needed to operate, which was just the cargo coverage and the liability coverage? Because my truck and trailer were paid off, I actually had this option. Okay, to figure this out, I thought about all that I had learned so far. So here is my thinking on this. The first thing I learned was that truck insurance companies will drop you if you make too many claims. 2 of the 3 claims I made in 3 years were for accidents that were not my fault and unavoidable. However, just because the accident was unavoidable doesn't mean that making the claim is unavoidable. Next, identifying the existential risk. If I need insurance to operate, but insurance companies can drop me at any time, then that means the insurance companies pose an existential risk to my business. So to reduce this risk, I need to limit the amount of claims that I make. This means evolving from thinking that I would just make a claim for anything that happens to thinking of truck insurance as a safety net against the most costly accidents. It's better to pay for small repairs myself and keep my business running than to nickel and dime the insurance companies until the point where I can't get insurance at all. So that brings me to my first adjustment. If I will only use insurance for high damage accidents, I need to raise my deductible to save on my annual premiums. For example, if I'm only going to do a claim for something that costs, say, $3,000 or more, then having a $1,000 deductible is pointless. By raising the deductible to a level that is at or above what I'm willing to pay out of pocket, then I can save on those annual premiums while ensuring that the insurance is only used for significant expenses. So that was my level 1 adjustment. So then came my next revelation. I need to just totally reconsider the types of coverages that I need. If I'm going to repair most things myself, except for super large repairs, then I need to reconsider whether to have physical damage coverage at all, or whether I'm willing to assume that risk myself. So to figure this out, I needed some data. So given my last 3 years of operations, what would have happened if I didn't have physical damage coverage? So I had 3 claims in 3 years for a total of $15,500. The annual savings in premium, if I don't get physical damage coverage, is $9,650, or about $29,000 over 3 years. So using this hypothetical example, I would have saved $13,450 over 3 years if I had just made all the repairs myself. So you can see that just blindly getting all the coverages might not always be the best bet. And then another thing I had to factor in is the deductibles. Each incident cost me $1,000 out of pocket. So even with the physical damage coverage, I'm still assuming a good portion, 20%, of this risk. Now, so then the absolute last thing I factored in was my own special driving style that I call go slow, no macho, no uh-oh. Basically what this means is I drive 54 to 55 miles an hour, always yield to other drivers 100% of the time, and I never drive too long so that I lose my focus or my joy. So, taking all this into consideration, what did I decide? Okay, first, I decided to go with Progressive. No one could beat their discount with the pay in full option. Second, I decided to go through an agent instead of buying it through Progressive directly, even though this meant I'd be paying an extra couple $100s. I reasoned that they were local and I just liked them, and I thought it would be nice to have a little insurance team. And third, I decided to forego the physical damage coverage. Well, that's about it, guys. I think the only last thing I want to tell you is that my insurance was set to expire on Sunday, and I set up everything on that previous Friday, but that wasn't enough time to get all of the stuff set up through RMIS so that I was ready to roll with all the brokers on Monday. So the brokers notice the second your insurance expires, but it takes them a little while to get you back up and running once you get the new insurance set up. So plan accordingly. That's it, guys. I hope this helps you make the best decision when selecting your new insurance company and your coverages. Thanks for watching.